Hello traders, my greetings to each one of you and congratulations for receiving your product. This is King of Forex from the 1% Club. In this video I'm going to reveal the complete version of this strategy so you can understand it very well and become able to use it. Okay, so I will be revealing the whole version of this strategy in this video. But first, and especially if you are starting out or just a beginner in forex trading, you need to master the basics first. And many traders, majority of traders repeat the same mistakes. They do not master or learn even the basics. They just want to jump immediately into trading. They don't have the right patience to learn the right knowledge from the beginning. And therefore, you can find these essential knowledge, the complete guide, the right knowledge to start on the right path in my other products. You can find them. Even if you are an experienced trader and you have some experience, maybe, and it's a lot common that many experienced traders are losing because they don't know the basics yet. Therefore, you can find these basics, you can find, and not just the basics, also the essential knowledge for starting trading on the right path in my other products. And this one is very advanced, and that's why I advise you first to master the other ones. Okay, so first of all I will start with the setup of this strategy, how to set up your chart from zero. First, what you need, let's say this one. Okay, so you open euro dollar, for example, or any other chart. Mainly you will be using different charts, not just this one, euro dollar. Okay, so you open it, it will be like that, and I am using MetaTrader 4, okay, or MT4. When you open an account with your broker, ask him that you want to trade on MetaTrader 4 and it will be available for you. And also you can download it from their website. If you just search for their website on Google, you will be able to download their platform MT4. It's one of the oldest and the most popular and the best. Okay, but using it from your broker is also a good way. Okay, so if you open an account, and obviously you will be opening an account with a broker if you want to trade, then you will receive your MT4 from this broker immediately. Okay, so no issues. Okay, so here, this is your chart. First of all, you go to properties in order to set up your chart. Okay, so I will start by, you have colors and common. Colors, you may select black on white. Okay, it's very clear, I like it. Also in common, you don't need to do anything here. And here select candlesticks, because candlesticks are much better than the other, and every professional trades the candlesticks. Show OHLC, open, high, low, close. These are, okay, these 4 prices. Tick on it, select show ask line, select show period separators. So you have these period separators between each period, these vertical lines, and remove grid for more clarity. Don't use volume and don't select this one. Also in colors, so now your chart will be looking like that. Click on this one and on this one to make your chart in the present. Okay, then I will be going to M1 and that's it. You may also use these colors here. For example, if you prefer to trade on green and red, you will be using these ones. Bear candle, you can choose it to red, and bull candle, you can choose it to green. Okay, so mainly your chart will be looking in other In other colors, you are just changing the colors of these candles. Okay, and in that case, it's very popular to use the bear candle in red, the bull candle, the bearish candle in red, the bullish candle in green. Okay. Now you will start adding indicators. All you need is moving average. So you select the moving average from above, from indicators list. You select period 20, exponential, apply to close, and I select the color red. You can select another color, but for me it's red. And when you select a color, try to keep on it. Don't change the color each time, because you have to memorize it very well. So when you are trading, by just looking, you will know immediately that it's EMA 20. Okay, just from its color. You don't have each time to think what EMA is this. Okay. Also, moving average again, instead of 20, period 50, and I also use for period 50 the blue one. Okay, that's it. Also, we will be using for EMA 9, and I use for EMA 9 the purple one. You can choose any color. Mainly I will be choosing this one for EMA 9, and also I will be placing EMA 200 on green, lime green. Okay, that's your chart. These are the EMAs. Also, but not necessary, we may use EMA 500, the last one. Okay, and I will choose Magneta, let's say this one. Okay, that's perfect. So these are mainly. You will also be using volume indicators. So you go here to volumes and you select volumes. Do nothing, keep it on default, just click on OK. Here you have the volume. What you also need is the EMA 20 applied to volume. Therefore, you go here on the left into your navigator tab and you scroll down. You have accounts, you have many other tabs. You keep scrolling down till you find the indicators tab. You click on the indicators tab and you scroll down till you find the moving average tab. As you can see here, I have moving average, and you click on it as I did. You click on it and you drag it on the volume indicator. When you drag it here, you release the mouse and this one open automatically. Okay, so this window open automatically. You select 20, exponential close, choose the color that you want. I choose a red one. Okay. We've made a mistake. We did not apply to. Okay, I will repeat. And I'm glad that I made it here, so you can immediately. If it happens with you, now you know how to fix it immediately. Okay, so 20 exponential red, but that's it, and apply to first indicators data. Otherwise it will be applied to the main chart. Okay, and that's it. Now EMA 20 is on your volume. If you click on it, you will see it 20 exponential first indicator data and red. Okay, so you have to choose first indicator data. If you forgot, just repeat it immediately. Okay, so now volume indicator is very well. And we have everything. Our setup is complete. Okay, so I will be using the main ones because they are already set up, and that's it. Okay, now I will start explaining the whole strategy step by step. So focus, try to take notes if you want, and pay attention to the details. Repeat watching it as much as you want if you have missed any details until you master it. Okay, you have to master it, you have to learn it very well before starting to apply. So let's start. Here we don't have EMA 500, so I will be adding EMA 500 on this chart. Okay, I'm choosing this one, deep pink, let's say. Okay, perfect. So I'll be adding also here EMA 500, and here also I'll be using these charts just to show you how everything works. Okay, here we are. Now we have EMA 500. We will not use it directly, but we will be using it also. We will be referring to it. Okay, so for now, forget about EMA 500. First of all, I repeat, the main reference is EMA 200. Your main reference every time you are trading is EMA 200. EMA 200 is everything. Everything starts from EMA 200 and everything ends in EMA 200. How? For example, no one knows when does the trend starts, but now you know. And what is the answer? The trend starts from EMA 200. No one knows when the trend is ended, and now you know it's on EMA 200. So this downtrend, where is the start of this downtrend? Here, EMA 200. It's not there. Okay, it's on EMA. Okay, I'll be removing EMA 500 for the moment, so to make things much more clear. And when using it, I'll be referring to it. Okay, so here we are. This trend started from here, not from there. From there, the price was retracing toward EMAs, and officially the trend started after breaking EMA 200 from here. When did this trend ended? Here, or if you want, this was a period of the market or a situation in the market. The market has too many periods and too many situations to offer, and therefore you need to know to differentiate between each situation or each period. Where are you now, in which one? So whenever the price breaks EMA 200, we are in a new period. You forget everything before. Okay, everything that happened previously does not have anything about. You don't have to think about it for this thing that I'm saying now. Pay attention. What happened in the past year is very important. But what I'm saying is now you have entered a new period, independent from the other periods. Okay, since price started broke EMA 200, this is a new period from here. Okay, and this period was ended there. Also, new period and period. Okay, perfect. So that's how the market is divided, if you want. Now, in each period, either you have ranging market or trending market. So you have to differentiate between those. And sometimes it starts a trending market and become a ranging market because the price returned immediately to EMA 200. So making this difference is a key secret, and I will be giving you the whole secrets in this video. Okay, so now you have very well understood how the market is divided. Let's start talking much more technically. As you can see, when a trend starts going down, when a trend starts either downtrend or uptrend, EMAs start crossing each other one by one, okay, and form parallel lines, okay, and the price is going below EMAs, but EMAs are following the price. It's always like that, so you have to memorize this thing. When in downtrend or uptrend, whatever, EMAs start crossing each other, one following the other, starting from EMA 9, the shortest one, 20, 50 and 200. Okay, EMA 9 is always the fastest to follow the price, and the other follow one by one. So you will see this four parallel lines. When you see this four, you have to know immediately that you are in a trend. Okay, but this trend may end sooner or later, but for meanwhile you are in this downtrend. Okay, EMAs are a great evidence of this downtrend since they are forming like parallel lines. So how EMAs work? First, EMA 9 is exponential moving average, and it's EMA 9. It means it's applied to 9 periods, to the most recent 9 periods. So let's say EMA 9 here, okay, at this moment, at this candle. Why EMA 9 is here? Because it was calculated by the sum of the closing prices of the last 9 candles. So first close price was here, was this one plus this one plus, okay. So it's calculated from these. It's not just their sum divided by their number, divided by 9 in our case. That's the simple moving average. But here the exponential moving average, in mathematical terms, it's placing more weight on the most recent periods. Okay, it places more weight on the most recent periods. So the formula of it is differently. Of course, I will not enter into these details. We are not doing mathematics here, but just you have to know this information only. That EMA 9 that EMA's exponential moving averages are much faster than simple moving averages, and that's the reason, because EMA's puts more weight into the most recent periods, and since in the most recent periods price will be trending, EMA will be following the price and during this trend much faster than the simple moving average. Okay, and that's why EMA is preferred to use, because it's faster, and in trading in general we need fast execution of everything, and especially in scalping we need even a faster execution. Okay, now also you need to know one thing about EMAs, the difference between them. EMA 9 is the shortest, so basically EMA 9 is almost like the price, it's very close from the price. EMA 20 is about the last 20 periods, so when the price starts trending down, the sum of these closing prices here, is still included in the calculation of EMA 20. That's why EMA 20 takes much more time to start going down than EMA 9, because EMA 9 is calculated on the last 9, and the last 9 here are their closing prices are all low in this downtrend, but EMA 20 is still taking into consideration the sum of these closing prices here. Okay, because we are going 20. Okay, I'm not saying the exact candles, of course. I'm just giving you the whole idea that EMA 9 is for the last 9, EMA 20 is for the previous 20 periods. This one for the previous 9 periods. That's why EMA 9 is always much closer to the price and faster than EMA 20. Also the same, EMA 50 is lower, EMA 200 is the lowest one between these. Okay, so that's perfect. Now we have understood very well the setup from a mathematical mode, a very simple mathematical mode. You don't need to enter into much more mathematical details. Okay, now as you know, if you have already an idea about this strategy, sometimes we buy when price is below EMAs. Until the price reaches back EMAs, we close with profits. And other times we sell when price is above EMAs, and like here, and we close when price reaches back EMAs with profits. Okay, but it doesn't work always like that. And other times you cannot keep buying and buying for the price to reach EMAs. Sometimes the price start going on a very tough downtrend or uptrend, and in this case, if you keep buying and buying and buying and the price is going in a downtrend, you will blow your account. Okay, so you have to differentiate between when to buy in order to reach EMAs, when to sell in order to reach EMAs, and when to sell in order to follow the downtrend, and when to buy in order to follow an uptrend. Okay, so differentiating between these things is the whole secret. First of all, I will start by explaining each one of them, and then we will learn the secret in order to manage or differentiate between when to enter the first one for reaching EMAs and when to enter the second one for riding the trend. Okay, that's a secret by itself. So, first of all, for example, like here, when price, okay, now I will not be making the difference. I will be talking about each one apart, explaining each one apart. Okay, so I will start by reaching EMAs. So, now I'm going to explain everything about reaching EMAs. Reaching EMAs. When the price is going below EMAs, 9, 20, 50, and 200, especially 9, what interests you is 9. When price is going below EMA 9, creating a distance from EMA 9, a big distance, and it gets bigger if the price continued in this trend. The idea is that you start buying. So let's say you have placed your first buy order here. Then you keep on, if price keep on going down, so you will keep placing another buy orders. So your first buy order is almost there, let's say. Your second buy order is here, and third one, and also you are buying there and there. And then when the price reaches EMA, you will be closing your orders. The first ones may have made some losses because they are above, and the last ones, okay, below the line where you have closed, these ones may have made lots of profits, okay, from here to here. And by cost averaging method, you're a winner, okay. And sometimes price just move making a big distance very fast from EMAs and return in much faster mode. And here you will be making big profits in a very short amount of time. Okay, that's the idea. So you buy when the price is below EMAs. If the price continue going down, you keep buying more. And by cost averaging method, when the price reaches back EMAs, you will be closing with profits. But it's not like that. It's just the big title. But you have to know when to buy, you have to work on your timing and everything, okay? So I'll be discussing much more and how to manage your risk. You cannot just keep buying however, okay? But now I'm just showing the idea from the low side, and now I'll be showing it from the upper side, from the selling side. So this one, okay, this one is perfect. For example, here price went up making a very big candle. Let's say you started to sell from here and the price reached back EMAs, you will be closing there, okay? And also buy here. Okay, now so let's check it. So sell here and close on EMAs. Start selling from here and close on EMAs. Start buying, buy, and close on EMAs, okay? Also sell, close on EMAs. Sell, close, buy, close when price reaches EMAs. Buy, close when price reaches EMAs. Also from here, buy and close when price reaches EMAs. Okay, so I think it's very clear now. You keep selling also from the above. First sell, second sell, third, let's say, okay, and until the price reaches back EMAs. If your first sell orders are closed with some loss, by cost averaging method, since you have a bigger distance from the up and you have a sell order here, by cost averaging method you will be closing the total with big profits because of cost averaging method. That's the idea of reaching EMAs. Okay, also why we have, and now I will be going to explain trading the trend. Okay, so now the other part, which is trend trading. But before I start, here is a question that is a secret by itself. Why do we have these two situations? Sometimes the price return to EMAs, which is similar to ranging mode, and sometimes the price never return to EMAs in slow. Price will always be returning to EMAs, pay attention, but sometimes the price take very long time to return to EMAs, and here you should be trading the trend. Okay, so, or actually here we have the trend mode of the market. So we have these two modes. Why? Here is the secret. The market, if you ask anyone who is starting out in Forex trading, if you ask him about Forex, even if he doesn't know anything about Forex, he would say immediately that Forex trading is all about the market going up and down. Okay, he would say immediately that it's always up and down and things like that. So it's very well known that the market is always going ups and downs. But between these ups and downs, if we can reach the balance, if we can learn what is the balance line, okay, or the equilibrium line, where the price is always returning after going up and always returning after going down, if we can learn, we can find this equilibrium line, then we can reach for the price whenever it touches or return to this equilibrium. And this equilibrium is these EMAs. You see? So between the ups and downs of the market, price is always returning to this equilibrium level. Up, return, down, return, up, return, down, return, up, return, down, return, and that's the secret. But sometimes the market goes in a trend mode and it goes up and much further and takes so long to return to EMAs. It will be returning, but it will take so long. And in this case, if you keep selling and selling and selling, even when the price reaches back EMAs one by one, even the EMA 200, here you will be losing, because if the price is reaching the EMA 200 after a very long time, EMA 200 would be above your orders, and you will see this, and now I will be showing you this. So you will be closing, okay? You will be losing in this case. Okay, so that's a secret why we use this strategy. How is this strategy so useful? And that's the secret of the success of this strategy, because the market is always returning to its EMAs, which are these EMAs, which are the balance line of the market. Now I will be giving the whole title or idea of trend trading, and then I will enter into more details in each one of them and show you how to differentiate between them. That's the whole secret. That's all you need. Okay, let's start with trend trading. Okay, for example, this one. But here price is returning, so I want a tougher trend. I want to show you a very tough trend, this one mainly. This one is a great trend to discuss it. Okay, and even we can find even tougher trends. So price, take a look here. The trend starts as we have explained before. First of all, first sign, EMA 9 cross EMA 200. That's the first sign. EMAs are like the gearbox in a car. EMA 9 first, second EMA 20, third EMA 50, the last EMA 200. When the EMA 9, the shortest one, is crossing EMA 200, the longest one, it means that the price has the possibility of going up much further. Then EMA 20 followed by crossing EMA 200, and then EMA 50 also followed by crossing EMA 200, or maybe here EMA 50 was was almost reaching EMA 200 and went up again. That's perfect. Also EMA 9 and the 20 crossed EMA 50. So mainly all EMAs crossed each other one by one, okay, in the right order, and now you have this form starting from here. These are parallel lines, okay. These EMAs are forming like parallel lines, and the price started to go up. If you start selling and selling and selling and selling and selling and selling, you will be losing. Imagine that you are here selling and selling, waiting for the price to reach EMA 20, let's say. Okay, so all of these are sell, and when the price reaches EMA 20, you will be closing with a big loss, because you will have a big drawdown here. Your drawdown will be very big here, and your account may not hold this drawdown, so you cannot keep on selling. And imagine that you didn't close on EMA 20 and you are waiting for much further, like EMA 50 or even EMA 200. Okay, because sometimes when reaching EMAs we wait for 50 and 200. So imagine here you are still waiting and waiting. Take a look when the price reached EMA 200 or even EMA 50. Okay, and this uptrend is not so tough. We still have much tougher uptrend, but just the idea. Imagine that you kept on selling and selling and selling and selling when the price is going up in order to reach EMA 200, and imagine the loss that you will be making. It almost blow your account. It can blow your account. So in this case you have to ride the trend. Okay, in this case you will be buying and buying and buying and buying and buying, and then you will be closing somewhere here, somewhere up, and making these big profits. Okay, so in this case you will be riding the trend. Just I want to show you a tougher trend also. Okay, so take a look here. Price took a very long time to reach EMA 200. This one is very, very, very tough. As you can see, price went up. Okay, let me find it. I missed it. Okay, I'm talking about this one. Okay, I'm trying to find the toughest one. This one is very tough mainly, so let's talk about it. Imagine that, okay, as always, price, we always start from EMA 200. Price crossed EMA 200 from there. Okay, you started to sell, price returned to EMA 9 and the 20, that's perfect. And now you started to sell again. Take a look, you are selling here, okay, pay attention. You are selling and selling and selling and selling. Price went from here to there, making around 300 or 400 points, and you are still selling and selling and selling. Price is refusing to return to EMA 20. Price is refusing, and you kept on selling, so here you will be closing with a big loss. Okay, so in this case you cannot sell, you have to follow the trend and buy. How is following the trend? Okay, so first of all you have to realize this trend. As we have said before, EMA start crossing each other and cross EMA 200, and here we are. The price is going up from there. Price started to go up, so you enter your buy orders here. Okay, so you enter your first buy order here, and your stop loss would be below EMA 200. So if you are making a mistake, excuse me. Okay, so if you are making a mistake by entering the market here with a buy order, your stop loss would be below EMA 200. Therefore, if price return back below EMA 200, it means another period which may be a downtrend, so you will be closing with a slight loss. Then you wait for the price to see how it will act when it reaches EMA 9. And as you can see, when price reached EMA 9, it refused. Okay, where is it? Okay, here we are. That's perfect. When price reached EMA 9, it refused to cross it. Okay, price was rejected. Take a look at this candle. Price is rejected and closed above EMA 9. And here is your golden opportunity to place your buy orders. Here you will be placing many buy orders and buy, And this is when you start seeing these big candles, pay attention, because the market here will is about to reverse, because lots of traders are buying more and more and more, so lots of traders will be placing their take profits, okay, due to this big volume. As you can see, volume is very big here. It crossed EMA 20. It was below EMA 20 from a long while, and here it crossed EMA 20. Okay, so you will be buying and buying, and from there almost you can start closing before the market reverse. Okay, and here the market tried many times. We have triple tops, many times, or even much more. The market tried many times to break this resistance line, but was not able, and the reverse started from there. As you can see, the reverse started, and the price reached EMA 200 also. Even though if you didn't close there, you can close when price reaches EMA 20. Imagine how long it is. Imagine you were selling, waiting for the price to reach EMA 20. You will blow your account. But if you are buying and buying and waiting for the price to reach EMA 20 to close your trades, that's perfect in this case. Here you will be closing with lots of profits. Okay, so I'll be entering into more details about trend trading, and now I have given the whole idea about each one. So now you understand how the strategy works. You have trend trading and you have price returning to reach EMAs. You will be trading both sides. Okay, the secret of differentiating between this one and the other will be discussed in this video also. Okay, everything is will be discussed, but everything about this strategy will be discussed. But here I will start focusing now into details and enter into details in each one of them. Okay, starting with returning to EMAs. So let's make some zoom to understand it very well. First of all, here price, this is the first of the beginning, the start of the period, EMA 200. From there we can started the period, and price is going down below EMA 9. So from here we can start buying, let's say. Okay, why? Because if you buy this candle here in order to reach EMAs, it's very risky. You don't have to buy this candle here, okay, because price, even though it's making some distance from EMA 9, but it's very risky. Okay, because price is just reaching EMA 200 after a long period, so price may trend immediately, maybe. Okay, so on EMA 200, if the candle is crossing EMA 200, you don't start buying directly, and you don't start selling from the above directly. Okay, it's very risky. You wait for some other candles. Okay, so this one is nothing. Okay, and this one. From there you can start buying, and you will be looking at market watch always. Always look at your market watch. Wait for the candle to when it's about to end and start buying. So buy in this zone. How to know? From the seconds. Wait till it reach 50, 51, 52, 53, 54. Here the candle is about to close in a very low level, and you can buy it. Also, you don't want to miss the lower level and buy at the close price. Pay attention. So it depends how the candle is acting. If it's making a very big bearish candle or bullish candle in a very fast amount of time, then you can buy it. Okay, so you can buy it because this low, maybe the market will never return to it, maybe. Okay, so it depends, but you have to always pay attention to market watch to take it into consideration. Okay, so if it's just only on the first 10 seconds and it's going down, it's risky to buy here. You can wait for a much bigger low to start buying. That's the idea. So let's say you started to buy from here. Now it's safe. Okay, we are away from EMA 200. Now we can start buying. It's safe. So we have bought our first one here, and EMA 9 is there. Okay, price continued going down. We have entered second buy order and third one. But now my first order is losing because EMA, let's say my target is EMA 9. Okay, my line order is here, and EMA 9 reached my buy order. So now this buy order, when price reaches EMA 9 again, this buy order will be losing, because now when I will be closing on EMA 9, it's below this level. Okay, so this order is losing. But since the market kept on going down, I will be buying here and buying much more here. Okay, and when the price closes on EMA 9, I will be making profits by cost averaging method. Okay, that's it. Also, sometimes you have to wait for the price to reach EMA 20, and other times 50, also 200. Okay, how do you know that? This is one of the biggest secrets. Okay, so about your timing to wait, or actually which one to reach, which EMAs or which zone. So here I will be revealing the big secret. Pay attention very well. In order to enter orders to reach EMAs and to protect yourself from a big trend, you need to do the following. First of all, go into this mode. Okay, a very big zoom if you want, a very zoom out if you want, just to take the whole idea, and start realizing with me. In this one, price took lots of time to reach EMA 200. So as we have divided the market on EMA 200, the beginning of this period is there. The end of this period is there. This is a very long period, and in times it was 12:54, and here we are 4:38. So almost 4 hours. Okay, and sometimes the market takes 7 and 8 hours to return to EMA 200. However, after this long period, let's say you have opened your charts and the price is here, and you just want to trade when the price is returning toward EMAs. You don't know how to trade trend. Okay, so you have learned that in this case you should be trend trading. So you have opened the charts and you are here. I will be giving the whole situations to know how to act accordingly. So you have opened your chart and the price is here. Now you are looking what will the price be doing. Okay, this is an uptrend. Price is not reaching EMA 200. I should stay away from it. Okay, so you stay away. You wait for the price to reach EMA 200. When the price reaches EMA 200, you know immediately that the market will be going in sideways or ranging, and it will always be reaching EMA 200. Now it's a safe time to enter buy and sell orders to reach EMAs. Also you can aim for EMA 200. Now is your time. Okay, that's it, because that's the secret. That's how you avoid big trends, and that's why I'm revealing it in this video. Because since you have very well received it, it means you want to succeed. It means you are working yourself. You want to improve at least. Okay, so here you wait for this one to end, and from here the market will be going on sideways. Take a look. You buy here. Let's say, okay, so here we are. Price is going below EMA 200. You can buy here to reach EMA 200. You can sell here to reach EMA 200. And then when price starts to go down, you buy to reach EMAs. If when the price reaches EMA 9, your order is very close, or you are losing because of spreads or commissions, you don't worry here. You just wait for the price to get down much further. You start buying from there, and you can wait to reach EMA 200. Okay, so you start aiming for EMA 9 and the 20. This is about your timing. This one you will answer yourself with more practice when to close directly. When you will start feeling the market, you will know when to close, either here on EMA 9 or between, or in this zone, or you wait to EMA 200. Okay, but now since you are trading in this one you are safe. Okay, so either you close on EMA 9, but I'm supposing that on EMA 9 you are still in a losing mode, so you cannot close here directly. What you do is you aim for EMA 200 since you are in the safe mode. Okay, so you buy, you aim for EMA 200 to close. Okay, you sell for EMA 200, buy EMA 200. Take a look how the price is reaching EMA 200. But pay attention. You don't keep on doing that for so long. Okay, you don't keep on doing that for so long. Because after this, and this is the other secret, when to trade the trend? Now. Because since price is going on these sideways, reaching EMA 200, it will be breaking out either from above or below. Suddenly, this breakout will happen suddenly without any notice. So you cannot keep trading this range without managing your risk. And if the price breakout, what should you do? So pay attention here. As we have discussed, you will be buying to reach EMAs. With more experience, you will know when to close on each EMAs. Okay, so you will be buying, let's say, and when the price reaches EMAs, if you are not in profit, you may wait for the other EMAs. Sometimes you'll be closing here with profit, sometimes you wait for EMA 50, and other times you wait for EMA 200. Okay, that's fine. That's not the problem. Is not there. The problem is, if you are still on this one, you are making lots of profits here. Price is always going away from EMA 200 and returning. That's perfect. But then price crossed EMA 200 and started to trend. Okay, started to trend from there. And this is really a very small trend. But sometimes the price trend like this one. Imagine that you are selling on this trend, you will be blowing your account. Therefore, how to know that a trend is started after these sideways? How to protect your account? So mainly, as we have discussed, selling to reach EMA 200 and buying. Okay, also you have to take news into consideration. Sometimes the market is going on sideways, just waiting for the news release to act on it, and the price may be taken either on big sideways, big movements ups and downs during news releases, or a price may start trending. So always just keep the calendar of the news in the timing of the news. And also I have another on my website other a product special especially for fundamental analysis to learn how to use the fundamental analysis in the proper way. Okay, but now we are saying that we are on sideways. Maybe the reason is the news. Market is waiting for big news to happen to start entering, to start trending, and as you can see, volume on sideways is very low, so the market is waiting for something to break the sideways. Sometimes it's news. Okay, so here volume started to go up very high, volume crossed EMA 20 and is going up much higher, and price started to trend. So mainly from here, since price crossed EMA 200 and went down, here you should not buy. Why? Because as you can see, price broke this resistance area mode, this support and resistance mode, this ranging market. This is an indicator of breakout here. Okay, after going on this sideways. Okay, it's not a sure indicator, of course. Nothing is 100% sure, but it has a high probability of making a downtrend. That's what I'm talking about. Okay, so when the price breaks below these, you don't have to buy here. And if you decided to buy, when you see such big candles, just ask yourself, why are you still waiting? Why are you buying more? Don't buy more, because you are trading these sideways and already knowing in your head that the market is going to trend suddenly. So if you started to buy and you are seeing these big candles, why should you continue buying? Even though here the price returned, okay, but in other times the price won't return. The market will start trending. Okay, and I will be showing you an example just in a while. So here don't buy. The price has a big risk of a breakout. Okay, so you have to leave it in this way, or enter sell orders and start trending it. Okay, now I will be showing you how to enter this trend. But wait, let me show you that in this case, if you have bought, okay, you will price return to reach EMAs, you will be making profits. But it was very risky. Okay, so we don't want luck to intervene in our trading. Okay, this is trading, it's not a game, it's not casino. You don't need luck, you just need your skills. Okay, so buying here is very risky, you have to avoid it. Don't rely on luck. Never ever. Okay, as you can see, just to clarify my idea, as you can see, this one is a very tough uptrend. And what was the price doing before this uptrend? Price was returning to EMAs. As you can see, price was on sideways mode, almost from here. Price went up and returned to EMAs, went up and returned to EMAs. Okay, so since we are here on sideways mode, price will be breaking in a sudden, and that's it. That's it. So when you see from there, price broke this resistance line. From there, it's very risky if you are holding your selling orders. From there, you should close with a slight loss your sell orders, okay, and enter. Okay, so this was the resistance line almost. From there, you should close your, let's say you have entered some sell orders here. From there, you should close your sell orders and place buy orders to enter this one. And when you see these big bullish candles in uptrend, it means the trend is very strong. Okay, it's very strong, but you can take profit after these up candles and then buy again when price retrace toward EMAs. Okay, so big candles, traders think that big candles indicates that the price is still going up, will be going up much further, but big candles most probably indicates that people are taking profits. The buyers are taking profits, and that's why after big candles the price retraces immediately toward EMAs. So here you can close and you can buy again when the price retraces EMAs. I will be discussing the trend trading, but just now let me clarify much more that when a trend happens and when a range happens. Okay, we are talking about the big secret here. So okay, let me return it for a while. Okay, perfect. Imagine you have entered buy orders in this downtrend. That's impossible. Okay, this is a very strong downtrend. Imagine that you have ridden and entered selling orders in this downtrend. Just imagine how much of profits you will be making. Okay, and it holds from 15 till 22. Okay, very long time, sometimes very long time. Imagine you are buying and waiting for EMA 200, and after this long time price reaches EMA 200, you will be blowing your account, and it's very risky. You don't have to do this. Take a look. Price was in a range mode, as you can see, and sideways. Okay, it's very clear. Price is going away from EMA 200, returning. So each period here, as you know, breaking EMA 200 and returning is a period by itself. So each period is ranging period. Price is going and returning. Okay, away from EMA 200 and returning, away and return. So here a little bit tried to break from the above, but returned. Okay, it means that we are on sideways and price suddenly will be breaking out, suddenly, out of nothing. Okay, so here is very risky. Okay, you've made lots of profits reaching EMA 200 before and reaching EMA 9 and the 20. For example, let me clarify here much more also. For example, here you have bought and bought and bought, price is going down. So when reaching EMA 9, it was nothing. Of course, you will be losing. But you are waiting for EMA 200, and then when it's, or maybe on EMA 50, it was perfect. Or here even, you could have closed here. Why to close in EMA 9? You could have closed here. or maybe even to take it further on EMA 200. Sell close on EMA 200. So I'm going in the further with it, okay, to the further. But what I'm saying here, after the price is going like that and sideways here, price will be breaking out of a sudden, and the first breakout started from here, as you can see, but price returned immediately retraced, and that's why, since price, okay, pay attention here, I will repeat to make things very clear. So here we are on this sideway, okay, on this ranging, we are reaching EMA 200 and making profits. Out of a sudden, the price reached EMA 200 just from the above. Look at this candle. Okay, look at this candle. Okay, so price was going up and reached perfect. We have sold and closed here. But look at this candle. Price closed just above EMA 200 and started going up from there. This was a breakout. But we wait a little bit to confirm it, and then as you can see, the price retraced immediately toward EMA 200. It means it was a false breakout, but did not reach EMA 200, but very close. And then from there, the price started going up. If you have entered this buy one, this uptrend, that's perfect. You will be closing somewhere there because you have too many candles, okay, consecutives. Price tried to break this trend line for 3 times, for 3 consecutive times. So you have to close here. So you may have bought here and closed there with profits following this trend. But if you have sold and you are waiting, or let's say sold here and you are waiting for the price to reach EMA 200, here when price broke this last high, you should close with a slight loss your sell order and open buy orders, and here you will be closing before the reverse or at EMA 20. Okay, so but still this was not a big trend. Okay, and here if you are if you are an experienced trader here with more experience, actually here you know that it's a reverse and you will start reselling from there to reach EMAs. Okay, so here we are. Since we are on this sideways, that's what we are talking about. Price will be breaking out of a sudden. And take a look here. We are always buying to reach EMA and selling to reach EMA. And then here, price went down. Okay, let's suppose that you have bought here. You have bought here in order to make profits when price reach EMA 200. Okay, perfect. And then take a look at this big candle. This big candle is indicating that the price is about to start trending and breaking this range. Let's say you don't have that, so here you should enter a sell order and your stop loss would be just slightly above EMA 200. Slightly above EMA 200. So if price returns toward EMA 200, you can lose a little bit, slightly. Okay, but if you win, you will hit very big. And also, you have to start preparing yourself when you are in a side range. You have to start preparing yourself. You have to count for, let's say, it depends. We cannot give a specific number, but mainly the price return for 4 or 5 times on sideways and then start trending again. Okay, like here for example, it went on 4 or 5 times and started to trend, but returned also. This was a very short uptrend. Okay, so now we are talking about the very big uptrend, very big trends, either uptrends or downtrends. So after this big candle, you should enter a sell order with a stop loss here above EMA 200. Why? Because you know that the price was all the time in a sideways, in a ranging market here before, and in this sideways volume was below EMA 20. But here, when the price crossed EMA 200, not just a big candle, with time, as you can see, volume crossed EMA 20 also from there. Actually, from there volume started to cross EMA 20 and volume get bigger and bigger. Okay, so as we have said earlier on, the market is always going on by ups and downs and always passing through the balance line, which is these EMAs. So in order for the market to trend, to be able to go in just one way, to drift in one way, either up or down, you need volume. the market needs volume, big volume. Okay, so big volume indicates that this trend is popular, is getting much more traders into it. Okay, so I will repeat the process. We are on sideways, we are expecting a breakout. We have placed a sell order here after seeing this black candle, and also from here maybe here you have entered a sell order and a slight loss when price returned to EMA 20, and maybe here a buy order, slight loss here. So you are trying now to catch this trend, but you don't have to just enter buy and sell orders whenever the price is crossing EMA 200. However, because you know that the price will be trending very soon. Okay, it's a slight loss, but many slight loss is not so good. Okay, so you need the indicator which is EMAs breaking below EMA 200. So here EMA 9 didn't break below EMA 200, so you don't have to sell here. Also from there, EMA 9 was not coming from below EMA 200. Pay attention, this is a secret. You need EMAs to come from below EMA 200, cross it and go up, or EMAs from above, cross EMA 200 and go down. Okay, that's it. So here we are. EMAs are below, EMAs started to cross EMA 200 here, but it's not working good, because when a trend starts, it doesn't start like that. As you can see, these candles are displaying rejection and indecisive. Okay, so these are not the signs of an uptrend or downtrend. Here, big candle is a sign of a downtrend. You place a sell order here, your stop loss is above EMA 200. If the price returns above EMA 200, you will be quitting. But if price didn't reach EMA 200 and the price returned, retraced toward EMA 20, but it did not reach EMA 200, that's why your sell order is available, it's protected. Okay, so you will be quitting on the maximum, okay, level. You will be quitting on the maximum level, because in a downtrend and an uptrend, as we have discussed earlier, these EMAs are making parallel lines, and between these parallel lines you have resistance zones in downtrend and support zone in uptrend. The first resistance zone is between EMA 9 and 20. The second resistance zone is between 20 and 50. The third resistance zone is between 50 and 200. Okay, so that's why you are placing your order above EMA 200. That's a secret, because above EMA 200 you have dismissed all of the resistance. Price have to break 3 resistance zones to reach your order, your stop loss. Okay, that's why you are very safe here. So after seeing this candle, you sell here, you make your stop loss above EMA 200, price returned toward EMA 20, rejected immediately. That's great. After seeing this candle, you should start selling from here, because price retraced. Always in a trend, when the price retraces, you sell here. You sell on the retracement, okay, on EMAs, and you place. I will be discussing more about the retracement. So mainly you will be selling and selling and selling and selling, because price is unable to break the first resistance area. Take a look at the first resistance area. Price is unable to break it. Each time price enter, the first resistance area rejected. Second time rejected. So first sell here, second sell, third sell here, fourth sell, okay? You will be selling whenever the price enter this resistance area. How to confirm that you are in a big trend? Okay, now we are confirming that you are in a trend. Price is unable to break the first resistance area, EMAs are aligned, and how to confirm and volume is going above EMA 20. But how to confirm that you are in a big tough trend? First of all, volume is getting larger and larger and larger. Okay, so it means the trend is getting much more popular, more traders are entering this trend. Also, another great indicator is time. Mainly, if price holded for 1 hour without reaching EMA 200, okay, it means this is a big trend on the way. So here 1513, and here 1637. Okay, so almost here. The 1 hour was here almost. Okay, mainly 1 hour. It's not very precise, but I'm just giving you, because if price returns to EMA 200, it would return usually in less than 1 hour, maybe 1 hour 50. Okay, you are understanding. So if price want to return to EMA 200, it will be returning sooner or it will be returning. If price is not returning to EMA 200, it means it will not return now. It will be a very tough trend, and the price will remain away and away from EMA 200 for a very long time. And in this case, after you have placed 5 or 6 sell orders here, after 1 hour passing without the price even able to break the second support, the second resistance area, which is between 20 and 50, price is not able to break this second support resistance area, and 1 hour is passed away from EMA 200, and volume is up and above EMA 20. All confirmations, all indicators are aligned now, and now here you can sell as much as you want. Okay, you can place many sell orders here, or at least add to your sells, and at least know that you don't close here. You don't close, everything is aligned with you. So here you wait, and now your target is to close on EMA 200. Okay, so you wait and you wait, you sell. Here you place your last selling orders after 1 hour almost. Okay, you place, and the price is not able to break the second support, the second resistance zone, and also volume is very high. Okay, but mainly the almost surefire sign that price didn't reach EMA 200 after 1 hour. Okay, so here you place your last selling orders and you wait from there. You wait for the price to continue downtrending. Imagine you are riding all of these, and with more experience you will start selling more, and whenever the price reaches EMAs, the resistance lines, you sell more and more and more. Here you have officially traded this downtrend, and imagine from here to there, let's see how many points. Okay, from here to there. Okay, very big one, almost from there. Okay, that's perfect. Price was around 1.22300, and you have closed on 1.21600. Okay, so that's a lot, and you don't have just one sell order, you have too many sell orders. So you will be closing here on EMA 200. You will be just missing this small distance between EMA 200 and here. Okay, and also you could have, if you have lots with more experience, you will be closing before reaching an EMA 200, because here price is making many bottoms. Okay, 3 bottoms. You have 3 bottoms. Price action is very important to understand when to quit and when to enter. You need price action, and you can find it in my products also about candlestick chart patterns and price action. It's essential for your success. Okay, for example, like here, it's very well known. This is 3 bottoms, and from there the price will be reversing. Okay, so you will close either on EMA 200 or there if you have price action experience. Okay, imagine how much of profits you'll be making. You are making too many sell orders. So also let me explain how things work in uptrend or downtrend. Okay, let's say in uptrend, I first buy here. EMAs are crossing each other. That's perfect. So we will take a look. EMA 9 was there, crossed EMA 200. Perfect. EMA 20 followed. We are still there. Okay. EMA 50 also was very close to EMA 200, but start to go up. Since these EMAs, and we were on sideways, of course. First sign, you need sideways. Okay, you are on sideways, and the trend started from here. So the price is going up, you start buying. How to confirm that this trend is not going to reverse now? Because price is still not able to reach or break EMA 9. First support area, first support area between 9 and 20, second support area between 20 and 50, third support area between 50 and 200. Okay, so you have both here to make profits from this trend. Price is not able to reach EMA 9, to cross EMA 9. So price is not able to break the first support area. But when the price reaches, when you are here and the price is slightly going, okay, here from price action trading, you can close here. Okay, let's say you don't know about it and you have waited for EMA 20. So you have missed a slight profits here, but that's fine. You will be closing on EMA 20, buying from here, buy, close on EMA 20. Perfect. Why you will be closing on EMA 20? Because after many long period passed, price was unable to break the first support area. Now price broke the first support area. It entered the second support area between 20 and 50. This indicates that the price, this trend may start to reverse very soon, because price started to break the support areas one by one, first and second. Entered the first, broke it, entered the second. Okay, so here, since you are in this support area, you buy. But okay, buy, we closed with profits, we buy here. Now we place our stop loss where? Below EMA 50. The ideal to take the maximum of it is to place it below EMA 200. But if price reversed toward EMA 200, now you will be making a very big loss. So you don't want that. So you place your stop loss slightly below EMA 50. Okay, it means you are giving the price the chance to enter this second area between 50 and 200. Okay, so and you are giving, you are protected by this support area between 20 and 50. So price have to make lots of efforts to break this support area and go into the second. Price sometimes does not simply break these support areas. It takes time to break them. Okay, so you buy here, you place your stop loss below EMA 50. Perfect. Price went up, everything is aligned. Okay, first top, second top here, and after seeing this shooting star, okay, in price action it's shooting star, this and candlestick patterns, here you should be closing immediately here. Okay, this indicates a big probability of price retracing back. So buy and close there. Perfect. And now price is still locked in this support area. It's not able to break this support area. From there, as you can see, from this one, price retraced and volume was very big. All the time volume was crossing EMA 20 and perfect. But from then, after this shooting star, volume faded immediately. Okay, started to be below EMA 20. Take a look at the volume. Now you have a missing sign of the continuation of this uptrend, which is volume. Okay, so focus on it here. Okay, so volume, now you have missed the volume. Here we are. Okay, so take a look, volume was up, and this one after, okay, from there volume started to go down. When you are missing the volume after an uptrend, it means the price, what will price do? Like if, okay, price will be retracing, going up in this big angle, but retracing in very slow mode. So here, if you are very well experienced and you saw that volume is missing, you can sell here and wait for the price to reach EMA 200. But it will take time. Okay, and you place your stop loss slightly above in case the market decided to go up further. So as you can see, your trading style is your stop loss will be just slightly above your order or below it. So you will be losing very small amount, and when you win either in big trends or in sideways, you will hit big. For example, even this one from here to there is very big profits. Okay, so now I will be just giving why we use EMA. I said before it's not necessary, but you can use it. Okay, how? EMA 500 is like 200, very long, but longer one. It's EMA 500 is actually 500 periods. Okay, and here I will be telling you also another thing about the EMAs for higher time frames. Mainly you don't need higher time frames, but sometimes, and if you are waiting for the price to reach some EMAs, you may look at higher time frames. For example, if you go to M5, you will see almost the same. That's why you should be trading. That's why it's better to trade lower time frames. Okay, even on daily you have these EMAs, and take a look here. As you can see, price. Here we are on euro dollar daily. Okay, we were on sideways. Take a look. This is the daily market. We were, so even you can trade the daily market with this strategy. We were on sideways. Okay, price started to break up from here. Buy. Price went up, unable to break the support areas. Take a look. Okay, stuck in the first support area. Okay, so buy, close here. Buy again in this support area. Place your stop loss below EMA 50. Price is stuck between here 20 and 50. It's not able to cross the EMA 50, so your stop loss is never reached. Price continue going up. Price were 1.11, let's say, around 1.11, and you have ridden this trend up and up and up. Here you have prices about 1.19. Imagine how much of profits you will be making if you trade the daily chart, trending the daily chart. But this is a long-term trading or position trading. Okay, so mainly here we are talking about trading lower time frames and scalping, but just to show you the idea, price is still above and above. But here price tried to break to enter this support area, and here also this support area, but was unable to reach EMA 200. Okay, and all EMAs are parallel, forming parallel lines. Okay, so sometimes you use higher time frames. For example, if you are trading on M1 and you decided to move on M5, for example, if you are selling and waiting for the price to reach your EMAs, mainly on on M5, your EMAs would be making much bigger distance from the price than on M1 time frame, and that's why sometimes you can trade M5 higher time frame either to break the spreads if you have big spreads, or commissions, or you want just big distances. And also when the market trends on M5, it holds much longer than on M1. But so you can trade any time frame. What I want to make clear here is, for example, the EMA 200 on M1, okay, EMA 200 on M1 would be like the EMA 50 on M5. You see it? You see it? Because here EMAs are calculated on 5 minutes basics. Okay, but there they are calculated on 1 minute periods. Okay, so that's what you should know, that if you are trading here on M1, okay, now let me show you here. Okay, so from there, as you can see, EMA 9, 20, 50 and 200. Okay, so EMA 50 is around 1.2186. If we go to M1, okay, EMA 200 is around 1.2186. You see it? So the 50 on M5 is almost the 200 here. Of course, the lower time frame, the lower your time frame, the bigger EMA period you need to reach the lower EMA period on higher time frames. Okay, so if you go to, for example, EMA 200 is EMA 50 for M5, but is EMA 20 for M30. If you go on M30, okay, that's it, 1.219. It's almost like that. Of course, it's not accurate. You don't get the same answer, of course, at the same price level, but this is just to make things better, how EMAs are working, and to understand how time frames are connected via EMAs. That's why you can only trade one time frame, and don't rely on the others. Okay, you can only trade one time frame, and you can use the others, but I'm telling you how these time frames are connected via EMAs, moving averages. So on M1 the EMA 200 is or represents EMA 20 on M30, because M30 is much slower than M1. So your EMA 20 on M1 time frame is very fast, but on M30 EMA 20 is not so fast. Okay, so now the idea is clear how the time frames are connected, and if you need to trade higher time frame or not, you can trade just one time frame and focus on it. Okay, you can use the higher time frames, but mainly you are returning toward the same thing, because each EMA there is representing another EMA here. You have to know this one, and you can use higher time frames, of course. Okay, so I'll return to EMA 1 to show you about EMA 500. The idea about EMA 500, you don't have to use it. You don't have to use it at all. Okay, but just since I'm giving you everything in this about this strategy in this video, okay, so we'll be also discussing EMA 500. The EMA 500 is mainly the longest one on M1, and EMA 500 is used for trend trading and also for reversals. Sometimes when the price break EMA 200, okay, and it's going further, you can look for EMA 500. Take a look how price here, how EMA 500 was a support, was a tough support. The trend was up, reversed, broke EMA 200, and it was faced with a big support here on EMA 500. Okay, big support here. Also, another secret about EMAs, why the EMAs, this EMA strategy is actually very powerful, very successful one, because mainly all indicators are made out of EMAs. That's why using the EMAs is essential. Okay, also in price action, for example, support and resistance are made from EMAs, as you can see, and all other indicators are made out of EMAs. Okay, that's why using the EMAs in your trading is essential. Okay, it's everything, the basics, how the market works and how to trade. Okay, so EMA 500 here is a support, as you can see. So if you are trading this reversal, since you have this here is almost head and shoulder stop. Head and shoulder stop, it means reversal, most probably. This is price action. Okay, so sell from there. Price broke EMA 200 and still continuing. Where price is going? Price is going toward EMA 500. That's it exactly. Okay, so that's one way of using EMA 500. You can keep it in your chart to check where the price is going, where is its next station if you want. Also, EMA 500 is used for trend trading. As you can see here, EMA 500 is doing this trend line. Okay, price is unable to break above EMA 500. It's like a trend line for this area, for this downtrend. But mainly, for example, you can buy from here when price break EMA 500. Okay, when price break EMA 500, you can buy and ride this uptrend. Okay, but mainly, so everything is doable. You can use it as a trend line, as a resistance line, support line like here, resistance line. Okay, you can use it as when price break it, buy, or from above or from below, sell, as an indicator of since price is breaking EMA 500, as an indicator of going in a trend line. Okay, you can use it in many ways, but what you need essentially from it, you don't need it also, but essentially if you want to use it, the main use of it is for the next station, deciding the next station of the price. Here it is, EMA 500. Price broke the first EMA 200. Where is it going? Toward EMA 500. After price broke the first EMA 200. Where is it going? Toward EMA 500. Okay, that's it. Just like that. Just to see the direction of the price. Where is its next station? Okay, that's it. So now I'll be going much further into trading secrets, revealing much more advanced details. Okay, so I'll be removing this one. Okay. So in order to manage your risk in reaching EMAs, when you are selling to reach EMAs or buying to reach EMAs, what you can do is the following. For example, here, this one is very risky. If you have, and mainly here you should have sold. Okay, here is a sell one to make profits out of this downtrend, and you will be closing here on EMA 20. Okay, you don't have to wait always for EMA to return, for the price to return toward EMA 200. I will be explaining this one. Just let me just clarify this point. Okay, price now is going below EMA 9. Okay, I want to buy for the price to reach EMA spec. Pay attention. I have bought here, but I have realized that the price is EMA 9 is still going down much further, and I'm not able to, and here price is not able to break EMA 9. Do I have to place much more buy orders? Absolutely no. Do I have to keep on this buy order and wait and accumulate losses? Also no. Since price is refusing to reach EMA 9 from there, many candles from there, you will be closing here your buy order and entering a sell order, and instead you will be closing with a sell here on EMA 9. You understand it now? And mainly, since you are still just going down from EMA 200, here you should be selling here. Because it's a downtrend already, okay? You are coming out from EMA 200 after sideways, your price was on sideways, price broke here and started trending down, okay? This is a selling order. But just to manage your risk, when you see that the price is just reaching EMA 9 and returning, unable to break it, don't add on your trades, instead close with a slight loss, okay? Don't give it too much time. When you are buying to reach EMAs or selling, don't give it too much time. You should see this V shape either from above or from below. Price should, like here, price went up away from EMA 50, return to EMA 50, making this U shape, or sometimes it's V shape. Okay, it depends on the angle. And here the angle is good one. The slope of this trend is a good one. The higher the slope when price is going like that, okay, it's not a high slope. If you draw this trend line from here to there, it's not a high slope, okay? So when the price is going in a high slope, going up almost vertically, sometimes it returns very fast, but the return is not up 90 degrees, the return will be very slow like that. Okay, so price go up and the return is like that. Okay, pay attention to these shapes. Okay, let me here remove EMA 500 since we don't want to make the chart looks more complicated than that. Okay, so for example here, let's talk more about risk management when buying to reach EMAs or selling. Here, price is down, I have bought. I'm waiting, first candle, second one, third one, price did not reach EMA 9. What do? I close immediately here on EMA 9 and I start selling here. I close my buy orders here and I start selling and wait for the price to reach EMA 9 again. But since in this downtrend I have sold, okay, I know very well price action and I saw this one, I'll be closing here with profits. Okay. That's why price action is essential. You need price action. Okay, so here the market is showing you a rejection. When you are selling and you arrive at this rejection, okay, this candle of rejection, the market has a very high probability of reversing. So close your selling orders here. Even though if you have closed on EMA 9 selling from above, you will be winning and offsetting and even making profits at the end, this slight loss here. Also about, this is the key, this is the secret of managing your risk using this buying or selling to reach EMAs. That's the secret of managing your risk. I'm giving pure purely the secrets here in this video. Okay, the secrets. So you work immediately using the most powerful that you have. Okay, the most powerful tools that are available here. I have sold to reach EMAs. Price is not returning. One candle, 2 or 3. What am I waiting for? I place a buy order, okay, and close either on EMA 9 when price reaches it, or here, for example. Okay, here also you have a buy order. Okay, and also pay attention here. If you kept on selling and selling and selling, you will be making profits when the price reaches EMAs, but you have to wait for longer EMAs, not 9, 20 or maybe 50. Okay, but why to take this risk? Okay, when you see price not able to reach EMA 9, get away from it, enter with the trend, not enter with the trend, not in the opposite or counter of this trend. Here also sell and close there. Also, if you have bought, you can close on EMA 20. Okay, but here these ones are indicating that price is not able to reach EMA 9. Also, many candles are passing without reaching EMA 9. Okay, so now I'll be moving to other charts to show you that you can apply on all charts. Okay, I'll be removing EMA 500, so we make it easier, knowing that I have added them. Okay. Also on XEU USD you can trade the same, and on XEU dollar, okay, you have bigger spreads in any account, but on XEU dollar, when this market trends, it makes very big trends, and you will be making lots of money trading XEU dollar, especially when you ride big trends. This one is a great trend, also great uptrend. Okay, it started from there. Take a look how the trend is formed. Take a look at all of these indicators. EMA 9 crossed EMA 200, first one. Price went up above EMA 9, 1, 2, 3, 4 candles without reaching EMA 9. Perfect, second confirmation indicator. Okay, take a note here. EMA 9 crossed. First of all, price is going away from EMA 9 without touching it. EMA 9 crossed EMA 200. Okay, price crossed EMA 200. That's essential to end the sliding period. We were on sideways or ranging period mode. We were on ranging mode here. Okay, so we are expecting the price to break out. Okay, we have discussed this earlier. So we are on sideways, on ranging, so we are expecting a breakout. Price started to go above EMA 9 without touching it. Price broke EMA 200, perfect. So this sideways is ended. Now we are in another period. Okay, that it may be a sideways, but it may be also a trend. And here we have the signs of trend. Volume is above EMA 20, perfect. That's it. Volume started to go up above EMA 20, perfect. EMAs are forming parallel lines. Everything is aligned. You can enter it from there. You can start placing your buy order from here. Where do you place your sell or your stop loss? Below EMA 200. Where to quit? When the price reaches EMA 9. Okay, either or EMA 20. Okay, but mainly to quit this one you need. Okay, so you can close on EMA 20. Perfect. But you can also close there. But you need some experience. When you start trading it, you will start learning that price is going up. You can close here. When it retraces, buy again and wait. You will start making much more things, but mainly you buy here. You close there if you have price action experience, or with more experience, with more time, you will be able to close there. In any ways you are protected, you will be closing on EMA 20. Then you start buying from here, placing a stop loss below EMA 50. Price reached this stop loss. Okay, fine. You quitted with a slight loss, but that's why price reached but in this case, that's why price reached your stop loss, because the market will not be making a very big trend. Because from the first, when this uptrend started, market returned and retraced. First support area broken, second support area broken immediately from the first retracement. okay, and from there price was not able to go up further, up retrace, so this indicates sideways. That's why you should not buy here, but mainly if you have bought by mistake, you will be ending up with a slight loss below EMA 50. And that's it, price is officially on sideways. So since here you are on sideways, you wait for the price to reach EMA 200. You don't enter this sideways and sell to reach EMAs. Here where you blow your account, knowing that this uptrend did not finish yet. The finish line is when price reaches EMA 200, and price did not reach EMA 200 yet. So price have big probabilities of trending up much more aggressive out of a sudden. Okay, so when you see this case, you don't sell or buy to reach EMAs. You don't. Okay, you wait for the price to reach EMA 200 and end this trend, this period of trend. Okay, and if you want to enter this trend, if you have started like here for example, and if you want to trade this trend, you will place a buy order here in this last support area between 50 and 200. You place a buy order here and a stop loss below EMA 200. That's how you enter this trend. So when the price reverses and reaches EMA 200, you will be closing with a slight loss. But the bigger possibility is that price will be trending up much more aggressive out of a sudden. Okay, and here it's not trending up because we don't have volume here. The market was about to close and volume disappeared. That's why the market was not able to continue going up. But if you give this market some volume, the higher probability is that price would be trending up again. And here you will be buying, placing your stop loss just below EMA 200. That's how you enter a trend in the middle of it. Okay, you buy at the last support or the last support area, you place your stop loss below EMA 200, or you sell above the in the last resistance area and you place your EMA and you place your stop loss. Okay, let me give you an example. In a downtrend, okay, that's what I'm talking about. You sell here and you place your stop loss above EMA 200. So you have sold here, price crossed EMA 200, your stop loss is reached there. You have lost cents, okay, from here to there. This is not, of course it depends on the volume you are using, but imagine just from here sold and quitted with a slight loss here. Really it's nothing. Okay, but also pay attention when to I will be showing you how to use the resistance mode, like here for example. Okay, so when you see it that you have sideways and price is remaining above EMA 200, that's a flag. Price is giving a red flag that it may continue trending up much further, much more aggressive, because this period did not finish yet. Price did not reach EMA 200 yet. Also, so you buy here the last support area, your stop loss is below EMA 200, and then you enter it and you start closing when the price is making big distance from EMAs, and you start buying again when the price is again in this support area if you want. Okay, now I will be showing you in the sell mode. Okay, for example here price went down and returned, so we are in this one. You can sell here, place your stop loss above EMA 200. You are in the last support area, in the last resistance area between, but here the last resistance area formed between 50 and 200. That's why I have given this example. Okay, but also from there you could have sold and placed your stop loss above EMA 200 slightly. So imagine how much of profits you will be making. Okay, you will be making very big profits. Okay, from this one. Also to show you in gold in another, I'm just looking for a downtrend. Okay, that's it. That's perfect here. Sell here, place your stop loss above EMA 200. Okay, since you were on sideways, it was expected that price would be trending either up or down. Price broke and trended down. The breakout was made in the downside. Sell here. Okay, you can close here, but it's okay. Price returned to your level. Okay, to your price level. That's fine. Price continued, and here you should be closing. Okay, on EMA 20 almost. So you have closed with profits. You have sold here, you placed your stop loss above EMA 200. Okay, so price did not reach your stop loss and you made lots of profits. Okay, that's the gold market. Okay, that's what I'm talking about when pay attention here, and so glad that I have found it. Okay, I was talking about the slope or the angle. Okay, for example here we are. Take a look, the slope is almost vertical, okay? Also I have found another one, much more aggressive. Okay, take a look here. Price went up almost vertically, okay? Almost here a slight difference, but almost vertically up, okay? And then price returned toward EMA 200, but look how much of time it took. Price returned up suddenly in just some minutes, okay, almost vertically, a very high slope. Take a look how long it took to return. Sideways, then going down, going up, up and down till return to 200. So when you have a very high slope, okay, price returns like that. You go up vertically and you return like that, also from below. Okay, and sometimes you have the V shape like here. Price went up in this angle and returned in almost the exact angle symmetrically. Okay, that's it. Okay, this is almost like a V mode, inverse V. Okay, that's it. Went up like that and like that. Also invert V. So pay attention to the V's. Also this one, the same way that price trended down, the same way price returned to EMA 200. You have to start paying attention to these shapes, okay? And with more experience, you will recognize them and use them, okay? Moreover, okay. So let's see GBP dollar. Okay, I have opened now. Let's say that now I'm opening to trade, and I saw this one. I'm in this situation. What do? I sell. Because price is holding below EMA 200 for a very long time. It's a downtrend, absolutely. I sell here, I place a stop loss above EMA 200, and my take profit were below this last low, mainly below this last low. And then I will change my take profit depending on the market, how is it acting. For example, like here, okay, let's say I have entered here a sell order, okay, and my take profit would be below this one. Since I saw, and my stop loss above EMA 200, I sold here, my stop loss is above EMA 200, and my take profit is below this one, okay. Since I saw that price is going without touching EMA 9, I know that it would be returning to EMA 9, so I'll be closing on the return of EMA 9. That's it. Perfect. And you can close just below your this last one, okay? Or moreover, to be riding this trend completely, you can close when price reaches EMA 200, okay? So you'll be moving your stop loss with EMA 200, okay? So let's say you started to sell from here. Imagine that your order was almost here. You started to sell from here, okay? Stop loss above take profit, above EMA 200, your stop loss, okay? EMA 200 is going down much further. Now your stop loss is there, okay? Now you are making these profits from here to there, because in a trend, or always EMAs follow the price. So in a downtrend, when you are making your stop loss above EMA 200, your stop loss will get lower in value with more time, because EMA 200 will be moving down, crossing your price level, and your stop loss will become below your order. So it's actually in the sense of a take profit, okay? You are moving your stop loss, it's a trailing stop. You are moving your stop loss to reach, always to be on EMA 200 and waiting for the price to reach EMA 200. This is one method of trading, but I prefer selling and closing below the last low and then waiting for the price to retrace and selling again. In this way you can double and you can double and triple your profits. If you want to only reach EMA 200 and to ride this trend toward the finish EMA 200 as explained before in the euro dollar chart, you have to place many sell orders here and wait for the price to continue this downtrend, okay, after being on sideways for a lot of time. Okay, so now I will be almost trading, okay, to show you how things work. So let's get to the GBP dollar. Okay, let's say that I want to trade this chart, so I'll be showing you much more in practice how everything works. Okay, so I'm returning back as much as possible. Okay, that's it. Take a look here. 100% 90 degrees slope. That's what I'm talking about. In this 90 degrees slope, how the price returns very slowly. Get back and return to EMA 200. Okay, so when you want to enter these, you have to pay attention. It takes time. Not like the V shape. Okay, this vertically takes time. Vertical slope. 90 degrees slope, vertical trend. It went vertically, 90 degrees slope. It returned very slowly. Okay, so it's almost like that, vertical and the diagonal. Okay, so let's see. Let's start trading from there. First of all, price was in a range mode here. Okay. Price was in a trend, first of all. Let's return back. Okay, a big trend here. I have entered from there. I started to watch the market from here. Okay, I have waited for the price to reach EMA 200, let's say. Price reached EMA 200 and now it's going up. I sell to reach EMAs. Okay, perfect. Here my sell with a... Here I'll be waiting for... if I sell here, you need a stop loss to quit, okay? Okay, you are sure that after... almost sure that after a big trend, price will be trending, but always keep a slight stop loss here. Here you don't have any resistance or support to use, just a slight stop loss, okay? So you don't, if the price started to trend from there, you don't get catched, okay? But mainly you know that after a big trend, price will be going on sideways. So here you will be trading these sideways. It means selling here and sell to reach EMAs. Sell and sell to reach EMAs, buy and buy to reach EMAs, everything is perfect. Now we have resistance line, okay, and support line, because price created these in this new period after reaching this EMA 200. Of course, now each time price open EMA 200, reach EMA 200, open new period or closes a previous period, okay, at the same time. So here, new period, okay, each time. So in this recent period, price broke up and broke the last high here with volume above EMA 20. Mainly you will be mostly using the volume during the trend, okay, to check, because the trend needs big volume. Okay, so volume missing, it means trend is about to reverse. Pay attention. Okay, so here we are buying here. Price broke this resistance, this high, broke it from here. That's why it's a breakout. Okay, so but this breakout didn't remain a lot because you are just still in the sideways mode, because we are just finishing this downtrend. So market is still about to go on sideways. Anyhow, if you have sold here, you can wait for another EMAs like 20 or like 20 or 50 or even 200. Okay, so here it's safe to trade after this uptrend, downtrend. Now after some time, okay, it becomes risky. Now it's risky. Now it's risky to trend sideways again. So I will wait for a big move, and this is it. This is the big move that we are waiting for to break this sideways. Here I will sell, and since it's going vertically, I know already that the shape will be vertical and then diagonal, most probably. Therefore, I wait 2 or 3 candles, but after seeing this big candle, very big candle here, absolutely I would have closed there. Because I told you, very big candles indicate reversals. That's a secret. Very few traders know about it. Okay, big candles sometimes like that indicates a reverse, because the sellers are taking profits or the buyers in an uptrend. Okay, so I told you, I am now, let's say, like placing myself in different situations in order to show you how to act accordingly. So pay attention. So here I have turned on my charts here. Okay, I saw that we were in a big downtrend. Okay, I kept waiting for the price. Okay, this is very big downtrend. I kept waiting for the price to reach EMAs. When price reaches EMA, I start trending this side markets. Okay, sideways. Then here I have sold, I have closed because of these big vertical candles. I have closed. Okay, but this one is indicating a breakout maybe because we were on sideways. So I will be waiting for the price to become very close to EMA 50 and I would be placing my sell order above EMA 200. Okay, so here we are, price is close to EMA 200. I would sell here and close there with a slight loss. Okay, I would sell here and close there with a slight loss. Then, and also I would have bought here to reach EMAs also on the same time. Okay, so I sell, I close, I buy, I close here on EMAs, and then I wait for the price to enter this support zone, and I sell with a slight loss here because price turned up instead of continuing. So I would sell here on above, slightly above EMA 200. Okay, and then I would wait to see what the market is about to do, and as you can see, volume is missing. It means we are still on sideways. So I will get back to returning these sideways, but paying attention for any possible breakout. And the breakout started to give signals from here, big candles and big volume. So from there I will stop. From there you should stop. Okay, now since you know that a breakout is on the way and you are waiting for all of the signs, you can start from here, let's say, selling or buying from here with a slight loss when price retraces toward the EMAs, buying also with a slight loss. And now, but you don't have to enter this one. Pay attention here. You have to filter your orders. Okay, now we are seeing big volume in these two candles. Okay, so price may be turning up, maybe it's a breakout. Okay, so we are selling here to reach EMAs. Perfect, we made profits, but we should have placed a stop loss because price has a big price will be trending now after these sideways. Okay, reached EMAs, perfect. Now price started to go up again. Okay, but you don't buy from here. Why? Because you don't have this far EMAs coming from below EMA 200 and going up. Even here it was not enough to, okay, this one is a great buy. EMA 9, take a look how a trend starts. Price start going many candles without reaching EMA 9. EMA 9 across EMA 200, volume above EMA 20. From there you start buying here, you enter it, you close on EMA 20 or above. With more experience you will be winning this small distance between 20 and the above one, or even on EMA 9. Okay, this takes some practice to master it. Okay, so basically when you are there in this sideways and you start, you know that a breakout is coming. Okay, you will be trading this in this way to manage your risk. Okay, so here was a great buy, but price returned to EMA 200, so it was not a uptrend. Okay, but perfect until here. Again we are seeing the same signs. Take a look, price is going without touching EMA 9. Perfect, price is reaching EMAs. Okay, but EMA 9 reached crossed EMA 200 and you are going down much further. Okay, so here you sell, immediately you sell. Okay, you start selling because price is not able to break EMA 9, so you start selling and selling. Okay, and you wait for the price to reach EMA 9 or 20 to close. So you are selling from there and waiting to reach EMA 9 or 20. You can close here with your profits and wait for the price to retrace back and start selling again. Or since you know that you are on sideways and you are waiting for this big trend, you start selling from there and you place your stop loss at EMA 200. Imagine you will be taking all of this all of this, and you will be closing here on EMA 200. And what you can do when you become much more confident, sell and sell and sell and keep on selling whenever the price retraces until you reach EMA 200. In this way you will flip your account. That's how you flip your account. If you want to flip your account, that's how it's done. You wait to be on sideways, you start selling below EMA 200 using the obvious discussed signs, and you wait for the price and you place your stop loss on EMA 200. Okay, you wait for the price to end this sign range, you either from below or above, you place a sell and you move your stop loss with EMA 200. Okay, now after reaching EMA 200, price will be going on sideways again. That's the first way to trade the trend. Also the other way is selling toward EMA 9, closing, waiting for support, waiting for the price to retrace in this resistance area, sell again. Okay, sell again. Here price is not reaching EMA 20. Okay, you wait, and you close here. Okay, almost there, and then you resell again here. And this way you will be doubling your profits. But if you keep riding this trend, is much better, because the confirmation indicator is volume is getting up higher and higher, and then time is passing. You have passed the 1 hour. Price did not reach EMA 200. So just move your stop loss with EMA 200, keep on selling, and watch how you will be flipping your account when price reaches EMA 200. Then we have, so now I'm focusing more on how to flip an account if you want. Okay, so now here we are going on sideways after making profits from this big trend. On sideways, okay, it takes some time. Also here we are at the end of the market day. It's the end of the market day, so mainly you will not have a trend, that's for sure. Okay, you don't have volume, so you don't have a trend. You need volume. Markets need volume to trend. So here we are on sideways. Okay, so here I'll be trading these sideways. Sell here, take profit. Buy, take profit. Reaching EMAs, sell, reach, buy, and reach EMAs. Okay, but mainly at this time you will be closing. You can trade any session at any time of the day during any session. Just avoid the first and last hours of any trading day, because in scalping in general it's highly recommended to have a high volatile market, and in the first and last hours of any trading day market is slow, so you don't have this high volatility. Price will be moving very slow and EMAs will be each other. Okay, this is the worst scenario to trade. Okay, so trade high volatility times, any time and any session of the day. Just avoid first and last couple of hours of any trading day, like here for example. Okay, let's continue. From there, after going in this sideways, market needed some volume. From here, a new day. So during the opening you have a high volume. As you can see, volume is crossing EMA 20, and from there the market started to go up. Okay, trended up. So you can enter this one, but you don't have to enter this one, I would say, because market is just opening. At these hours you don't trade, and the spread is very high. Okay, so here we have missed it. Okay, from there price is going like that on sideways. Price here was on sideways, and this one it's also sideways, but a little bit with this U shape. Okay, here also price is going on sideways, as you can see, away and return, away and return. This is not, even though the price is going up, making an uptrend, but this is not the uptrend that we want. Okay, price is going on sideways almost, so you can sell and buy to reach EMAs in this case, and you can also, that's it, we are on sideways but going up slightly, sideways up slightly, sideways up slightly. If this is not a tough uptrend, you can be trading this, you can be trading it with EMAs in this case. Okay, and always use a slightly stop loss if the price started suddenly to break out. Okay, but mainly we didn't reach. Okay, and that's happening because this was a slow time of the market. That's how the market acted during these times. Okay, so now here we are, price after long period without reaching EMA 200, as we have price is going on sideways, so now we are waiting for the price to break these sideways, and that's it. From there price started to break, so we can start buying, and price returned to EMA 200. We closed here with slight loss, okay, but here you can also buy again, and you will be closing almost there on EMA 9 or 20, with big profits, and you will be buying almost there at the last support area, okay, with quitting with a slight loss here. But this is clearly a reversal, so even buying there doesn't have any sense. But I'm just explaining everything that you can do, okay, and that's it. Also, here we have entered. We are still on sideways. The V shape. So here you will be buying and selling in order to reach these ones, in order to reach EMAs, and paying attention. That's what I'm talking about. Paying attention for a breakout. Here you are still looking for the breakout. Okay, that's your breakout. Here you will be buying, okay, because you see a very big candle. Volume was below EMA 20. Volume suddenly crossed EMA 20 with big green candles. You buy here. You enter this big trend. Okay, you will be closing either here on EMA 9 or 20 first time and rebuying, or you can keep on buying and buying until the price becomes very high. You will be closing before the return, or even you can close on EMA 200. Imagine from here to there is still very big, okay? And here what happens after going on this big period without reaching EMA 200? Sideways. You start again, buy and close, sell and close, buy and close, sell and close, and we are waiting for the price to start trending again. But this is the end of the day, a new day. Okay, this is a new day. Price started to trend again. How do you know? After going on these sideways, take a look here for the volume. Volume is going up. Okay, volume is going up, and price was unable to break EMA 200, returned up very fast with a very big volume crossing EMA 20. It means this is an uptrend, and you have everything aligned. EMAs cross each other, and you have these parallel lines. EMA cross each other and parallel lines, and the price started to go up, breaking first support area, second support area, but unable to break the last support area. So I would wait for here to see this big candle and this big volume. I don't enter this uptrend here. I don't have volume. I don't have big volume. Trend needs big volume. Here I see big volume, and I am on this area. I place a buy order here and stop loss slightly below EMA 200, and I keep buying and buying to ride this trend, and I will be closing on EMA 200 or above here, because I saw that this is a resistance line. Price tried many times to break it but unable. Okay, don't give the price more than 3 shots. If the price is able to break it, it will break it. Okay, but going many times trying to break it and unable, then price automatically will return to EMA 200. Okay, so don't wait for it for that amount of time. Okay, now after this long period, we have reached EMA 200 again. Now it's safe to reach EMAs. We are on sideways until a breakout. Okay, we are still on sideways. Okay, and that's it. Okay, so that's how you should be. So we were on sideways, and this were the breakout here. So here you will be selling, and either that was discussed earlier on. Either you close on EMA 200, or here you resell again. Here you resell again. Okay, now it's clear. Okay. This is the full mode of this strategy. You will be trading trends and reversals also. So you will be trading trends and reversals, and you know now the secret when it's about to trade trend and when it's about to trade sideways. And also you can trade, when you become a little more advanced, you will be able to trade reversals in a trend. Reversals are also a good one. Never trade my last notice. Never enter a reversal toward EMA 200 if at least 1 hour has passed without the price reaching EMA 200. Never forget this secret. If almost 1 hour passes without reaching EMA 200, most probably the price will take very long time to reach EMA 200. So don't buy here and wait to reach EMA 200, okay? Because price may continue going down, trending down further and further. You are waiting for to reach EMA 200 and adding more buy orders, you will be losing in this case. But what do I mean by trading reversals? Is reaching EMAs simply. Okay, you are reaching EMAs here during sideways, but also during trends. Don't forget, okay? So for example here, you have sold because you know after sideways it will be a breakout. You have closed almost there. Now you have bought to reach EMAs, okay? So, but mainly in a trend, first of all, trade the trend. Okay, so either wait to close on EMA 200 or keep on selling whenever you are in a resistance mode. Okay, and then take your profits just when price break the last low. Okay, that's it, and trade the trend and trade sideways and pay attention to the main secret when the market is about to trend and when the market is about to go on sideways. Start applying everything you have learned in this video, okay? And you have it, you can rewatch it if you have missed any details. And that's it. Thank you for watching. My best wishes for you in your trading career. Okay, thank you.